The big bad giant Apple. That's right. Reported earnings and is down 2.5% after hours. So the question, Red Delicious Honeycrisp, who knows? But really, let's look at these earnings and see why this stock is down after hours. So originally, it actually did post a little bit of a positive gain. So we see at one point it was up a little bit less than 1%, but has since seen a 2.5% downward movement. Hello? Look at this. Just let me let you look at these earnings real quick. Apple, Q2 GAAP EPS of $2.55 beats by 29 cents. Revenue of $58.31 billion, up 0.5% year over year, beats by $3.67 billion. Are you kidding me? They beat their estimates by $3.5 billion. That's no chump change. I don't know about you, but that is what I would call no chump change. So far, what I see is massive. That just looks massive. That looks like a massive beat. So where's the difference here? We get, that's right, continued good news. A 6.5% increase in dividend too. What? They're increasing dividend and smash the quarter out of proportion, and still investors sell, huh? Still investors sell. Let's look at some more, see what we have. So, Apple, as you see here, beat, despite the pressure from the pandemic on supply chain and retail. The company unusually opted against providing guidance in the press release. Okay, I think we found our issue. Greater China revenue dropped 10.2 billion in last year's quarter to 9.5 billion due to supply chain and retail impact. So 0.7 billion, really $700 million. Definitely a concern there, right? So from the revenue breakdown, you see iPhone made up $29 billion versus a consensus of $28.39 billion, so they beat on that. iPad beat 4.4 billion versus 4.28 consensus. Mac beat 5.4 versus 5.26. Wearables, home, and accessories posted a quarterly record of $6.3 billion versus a consensus of 7. So they expected a lot more. Services, an all-time record of 13.3 billion versus a 12.85 billion consensus. This is the highest they've ever reported in terms of services, and that is where this company's going. Services is going to take over this company. It's only going to continue to grow. It's their massive growth segment right now. But investors are selling. I'm so confused. Apple adds another $50 billion to its existing share buyback program. Oh my gosh. Are you kidding me? $50 billion. They added a $50 billion buyback program on top of what they already have. And what are we freaking out about, investors? What are we scared about? Operating expenses totaled 9.5 compared to the consensus of 9.18 billion. What? I'm confused. We do see, though, during the conference call, Apple's confirmed that it will not issue guidance for Q3. They see a revenue headwind in the U.S. dollar appreciation. Wearables and iPhones should decline quarter over quarter in the June quarter. Services is expected to grow quarter over quarter, again, massive. And iPad and Mac on a year over year basis. Services is where it's at. Back to Q2, Tim Cook says the first 5 weeks of the quarter were strong before it was hit in China. The last 3 weeks felt the pressure on store closing outside of China and sharp drop in iPhone demand. But that demand will return. Again, we're talking about releasing the 5G iPhones later this year, ideally. Maybe in the next year. We'll see the delay. We don't know how it's going to happen. But in the second half of April, Apple picked up thanks to new product launches and the work-from-home shift changing consumer behavior. So, yeah, again, work from home, they're going to get Macs, they're going to get iPhones, they will get iPads. I mean, come on now. It's a good environment for them to succeed, all things considered. We look at this press release here. First off, they headline it with services reach an all-time high of 13.3 billion. That's insane. That is just really crazy. I don't know. I don't know about you. I think that's crazy. So let's go down just a little bit here. What does this company have to offer here for you? Just good stuff. Let's go ahead and click on this consolidated financial statements and look at this company. So we saw here from the services perspective, 13. If we're looking 3 months ending, $13 billion versus last year's $11.4 billion. Holy crap, $2 billion increase year over year. Massive, massive stuff. Total net sales increased by $300 million. Not as massive as you might say, but if you look at the 6 months ending, actually, we see a difference of nearly $8,000, or $8 billion. Let's not talk about the money that I don't even have. That's just pretty crazy stuff, and you really don't see cost of sales not anything really changing. You see a little bit of a decrease in cost of sales actually, which is pretty nice. So nothing crazy. Net sales by category, you can see a big difference here again. iPhone last year versus this year on the far right, as I've highlighted there, 85 billion versus 83 billion. Massive stuff. Quarter over quarter, or I should say year over year, you saw a decline. And again, it's because this quarter we didn't have a new iPhone, so what do you expect in that aspect? Nothing too shocking there. Year over year in terms of Mac, we saw a little bit of a drop, around 200 million. iPad, you saw a little bit of a drop as well, but in the wearable segment, you saw an increase of over $1 billion. And from the services segment, as we saw, $2 billion increase. That's crazy. So overall, total net sales actually rose 300 million year over year. It's massive in my perspective, but what can I say? Current assets, this is what we like to see. Cash and cash equivalents of 40 billion on this company versus last quarter, or 6 months ago, I should say. 6 months ago, they had 48 billion. So they lost 8 billion in cash. But it's one thing to consider. We'll take a look at what's going on with that. So total current assets, 6 months ago they had 162 billion. Now they have 143 billion. Total assets in general, they went from 338 billion to 320 billion. Pretty wild. Now we look at liabilities though. So you see where the difference is. So total current liabilities 6 months ago was 105 billion. Now they've paid down 9 billion of that to 96 billion. From total liabilities in general, we saw that decrease around 7 billion, or 6 billion I should say, 248 versus this year 241 billion. So again, overall they outweigh their liabilities by around, that's right, $80 billion. That's a lot of freaking money. So is Apple stock being fairly sent downward? I think it is. If we look at the PE ratio on this company, we're talking about a company that's reporting PE ratios in the mid-20s. But as a company that's actually seeing growth come back to it, we're talking about a massive opportunity ahead of them with 5G iPhones and with services and also wearables. Wearables is a segment that's going to continue growing as everyone at some point is going to have an Apple Watch. Come on now. Wearables are just going to continue growing time and time again, as well as just their home segment too, as they keep growing products for that. So this is a good opportunity for this company. In my opinion, I like anything under $300, around $290 is even fair. My cost base is still like freaking $200 on this thing, but it's obviously not going to get down to those levels. But if we're looking year to date on this company, it is still down around 2%. It went ahead and overall through this, since its high points in February, dropped 30% for a company that hasn't been as affected as some might see. Since then, it has seen a run up around 31%. Holy crap! But still, we're not going to be getting to those 220 lows anytime soon. This company, I think, needs to be traded a little bit more fairly. I think over 300 is a little much, but anything under 300 I think I'm fine with on this company for a long-term hold strategy, especially because they just raised their dividend and they will continue to do that. So really hope you enjoyed.